Hello friends, in today's video and our coming videos, we will be discussing different terms and jargons used in the stock market. A better understanding of these terms will help you in analyzing the stocks, as well as it will help you in picking a right stock at right time and maximizing your profits. Let's begin with the first factor, that is market capitalization. We will discuss what is market capitalization and how it impacts the movement, growth and performance of a stock. By the end of this video, you will be able to analyze a stock on the basis of its market capitalization. Also, at end, I will give you a list of certain stocks out of which you will be able to take an informed decision on which stock to invest and why. So do watch this video till end and subscribe to my channel. Let's begin. Market capitalization or market cap is simply a barometer which decides how big is the company. Mathematically, market cap of a company can be calculated as the number of outstanding shares of the company multiplied by present price of each share of the company. For example, if a company has issued 1 crore shares and the present value of each share is 100 rupees, its market cap will be equal to 1 crore into 100, that is 100 crore rupees. Now this market cap changes every day. As the price of each share increases or decreases, market cap will increase or decrease. Let's say the price of each share increases to 110 rupees, then the market cap of the company will be 110 crores. Or if the price of each share decreases to 90 rupees, then the market cap of the company will become 90 crores. So we can say that market cap is very dynamic and it changes every day. On the basis of market cap, companies are categorized into three categories: large cap, mid cap and small cap. Companies having a market cap of more than 20,000 crores are large cap companies. These companies have a very long track record. They have proven their worth in past, as well as they are established and at mature stage. There is very less probability of default in these kind of companies and are less volatile. It is easy to take decisions in these companies as a lot of information is easily available about these companies. Some of the examples of large cap companies are SBI, TCS, Reliance, HUL, ITC. All these companies are well established companies. They have proven their worth in past and there is less probability of default. This doesn't mean that these companies will never collapse, but the probability of loss in these kind of companies is less as they are more stable companies. Now let's move on to mid cap companies. These companies are having their market cap between 5,000 to 20,000 crores. These companies are presently at their developmental phase. They have proved their worth in past. Their systems, employees and structure is in place. Now it's time to acquire more market and acquire more customers for these companies and grow at a faster rate. Some of the examples of mid cap companies are Sonata Software, Relaxo, Trident, AU Small Bank. These companies are relatively smaller as compared to large cap companies. They have larger scope to increase their market share and potential to deliver higher returns to its investors. But there is always a chance that during any market collapse, their systems may collapse. Now let's move on to small cap companies. Companies having a market cap of less than 5,000 crore rupees are categorized as small cap companies. These companies are relatively very small as compared to large and mid cap companies. They are at their nascent phase and yet to prove their worth. Promoters of these companies are relatively young and are filled with new ideas and energy. This drives these companies for higher returns to its investors. Some of the examples of small cap companies are like Zen Technologies, 3i Infotech, Tasty Bite Eatables, Vadilal Industries, DCB Bank. These companies are relatively very small as compared to large or mid cap companies, and there is always a risk of these companies to be collapsed due to any external or internal factors. On the basis of our discussion, I have listed some stocks from IT, FMCG and banking sector in large cap, mid cap and small cap categories. In large cap, we have shares like TCS, Infosys, ITC, HUL, SBI, HDFC Bank. In mid cap, we have Sonata Software, VIP Industries and AU Small Bank. From small cap, we have 3i Infotech, DCB Bank and Vadilal Industries. Out of these listed companies, if you get an option to become a partner in any one of these companies, which company would you select? The obvious answer would be any one of the company from the large cap categories, as these are reputed companies. But these companies are mature companies. They will definitely give you returns in the tune of 10 to 11%. But if you aspire to get returns more than 15-18%, then you will have to select companies which are smaller and have higher growth potential. And this potential lies in mid cap and small cap companies. Before taking a final call on investing in a small cap or a mid cap company, one should try to answer some questions to himself or herself, like in which market segment does the company operate? Who are the promoters for this company? Do they have a clean past record? Does the company have any competitive advantage? And who are the competitors for this company? What are the internal and external factors which will impact the profitability or performance of the company? If you get the correct answers to these questions, you will be able to decide whether to invest in this company or not. Hope this video will help you in taking decisions before investing in individual stocks. We'll meet you soon in my next video with explanation of some other stock market terms. Bye bye, take care and happy investing.